What's up, guys? Welcome back to Dense Stocks. I'm just going to skip the intro on this video because I want to get right into it. Today I'm going to be talking about the day trade ban on Robinhood and help you understand it a little bit better. I do not work for Robinhood. I have nothing to do with Robinhood other than I've used them for the past 5 years, and I've once had a day trade ban myself. So I know a little bit about it. I understand the struggles. I understand the heartbreak. So let's talk about how you can avoid it. First and foremost, guys, make sure that you understand that this is not a regulation set forth by Robinhood themselves. This is a regulation that was established by the This is a rule established by the Financial Industry Regulatory Authority. Yeah, it's FINRA. It's established by FINRA. As such, Robinhood has absolutely no control over the terms of the ban and can do absolutely nothing if you get banned. So don't do what I did and piss off the customer service people by asking them to lift the ban. They can't. The main reason for the rule is because it's generally going to be bad for the economy if the citizens of a certain nation are day trading away their money blindly. A lot of day traders also trade on borrowed money, and if you don't know what you're doing, you can really lose a lot quickly. The rule is therefore set forth so that if you have 25 grand or more in your account, you are completely exempt from this restriction. I guess they figure that if you have 25 grand, you either know what you're doing or you can afford to take a little hit. Anyway, let's talk real quick about what defines a day trade because there is a little bit of involvement here. A day trade is when you buy and sell the same security on the same day. So for stock, what that looks like is you buy one share of Coca-Cola, regardless of the price doesn't matter, and then you sell it within the same day. That is one day trade. However, let's look at a different scenario. If you already have one share of Coca-Cola that you bought yesterday, you sell it today, and then you decide that was a bad idea, so you bought one more share of Coca-Cola, that is not a day trade because you sold and bought on the same day in that order. However, if you take that same scenario, you bought one share yesterday, you sold it today, you bought it back today, and then you sold it again today, that is now one day trade because you bought and sold once today. If you're trading options, this rule only applies for the exact same contract with all of the terms equal. So you can buy a Coca-Cola $55 call and then sell a Coca-Cola $60 call in the same day because those are two different securities. You can do that. However, if you buy a $55 call expiring on 3/5, you cannot sell that same option in the same day. You have to wait until the next day. These obviously reset based on trading days. This is not calendar days. Let's use the example of this past weekend was President's Day weekend. So of course the market was closed on Monday. Let's say that you made 5 day trades on Friday. So that's Friday. You have 5 days left. I'll start with 0. Monday, you don't get anything. Tuesday's one day. Wednesday, Thursday, Friday. The next Monday. Then on Tuesday, all of your trades reset. It's 5 trading days after. So it's technically the 6th day is when they reset. By the way, guys, I forgot to cover, this is a really commonly asked question. You can technically do 4 day trades before you get banned. It is the 4th day trade within a 5-day period that bans you. So you can buy and sell, and then the next day buy and then sell, and then the next day buy and then sell. And you're still fine as long as you wait until your day trades reset. However, if you complete a 4th day trade, that is when you'll be banned for 90 days. During the period in which you are banned, you are allowed to sell stock. You just cannot buy additional stock. So let's say you already have 100 shares of Coca-Cola. You can sell as many as you want per day throughout the entirety of your ban. You just can't purchase additional shares of anything. Same thing goes with options, although it gets a little bit tricky with the terminology because you can buy or sell a contract. But let's just say you cannot create a new contract for the entirety of the time you are banned. You cannot open a new position. However, you can close a position. If you've bought calls, you can sell them. However, I don't entirely know what happens if you've sold calls or sold puts and you get called on. I tried to find out, but it got a little bit complicated with the terminology and vernacular, so I would just avoid it. Now, if you don't know when, how many, or how often you've day traded in the last 5 trading days, you can view this from Robinhood by going to My Profile, Investing, and then scrolling almost down to the bottom. You'll see a little infographic with 4 circles. Well, 3 circles, and then 1 is locked. Those 3 circles will be filled with the company that you have day traded if you've completed a day trade in the past 5 days. It'll also tell you what date you completed that trade. Remember, you can fill all 3 of these bubbles with day trades. It is the 4th one, however, that gets you banned. Again, you are exempt from this rule completely if you have a cumulative $25,000 worth of stock, bond, cash, or any other securities in your investing account. This can also be obtained halfway through. So if you have $24,500 in your account and then you get day trade banned, you can deposit another $501 and the ban will be lifted. Keep in mind though that if you get banned and then your account reaches past $25,000, exempting you from the day trade rule, your account is still subject to the ban if you dip back beneath $25,000 again. So to put it simply, let's say you get banned at 24.5, then your account goes up in value over time to 25,000. You are now free to do whatever you want. However, if your account dips back below to 24,999, you're banned again. But it doesn't start from 90 days, it takes off where it left off. So if you were banned for 15 days and then you go above 25,000 for 5 days and then you dip beneath, you only have 70 days left of your ban. You don't start a new 90. Last little example that we'll cover. Let's say that you have almost $25,000 in your account and you have made 3 day trades in the past 5 trading days. Then your account goes up to $25,000. You can now make as many day trades as you want and they will not count against you. And if your account dips back beneath $25,000, you only have the 1 day trade left. However, if you're really close to the threshold, you can somewhat play this to your advantage. Let's say that you have $26,000 in your account and you make 6 day trades on a single day. None of those count towards your 3 that you are given. So if you dip back beneath $25,000, you have 3 more day trades until you are banned. The ones that you made while you were exempt from the rule do not count against you once you become subject to the rule again. Thanks again for watching Dense Stocks, guys. If you like this video, please watch my other ones. Give me a like and subscribe. Tell me how I can improve my videos in the comments below and let me know what you think. I respond to almost every comment. Thank you so much for watching. Have a great rest of your day.